Good weekend. Ira Epstein, and here we are with your SPDR ETF wrap-up. And this is your weekend edition, so we'll be looking at weekly charts for this Friday, December 2nd, 2022. I was surprised. I don't know about you. Here comes the Fed numbers that they've been looking at, labor, and a surprise. The market's looking, headline 200,000, but Bloomberg was saying just before, John Farrell was saying the latest numbers that our poll showing is 188,000, and it comes out at 263,000 new jobs. And the market drops like a rock, 400 points in the Dow futures, and I'm watching everything else go. And one of the things I always tell you, when you know there's a major, and let me quote on this, all right? The word is major report. Why be involved? If you're a SPDR ETF trader, there's always another opportunity. SPDRs and ETFs trade just like futures markets. They're better in some ways because they only have 50% leverage versus the 90% in the futures. So you get overreactions in the futures compared to this. But they trade like them, and they're based on them. The problem you have is you don't get the volume in them until 8:30 in the morning, Chicago time, and that's problematic because you've already had 3 hours of trading in the futures in front of this, or 2 hours at least before that. So it depends what time reports come out. To make a long story short, it's a miss for the Fed, all right? Their ideas have taken interest rates up from 0 to 3.754% so far. It's slowed job growth down. We're not at 500, 600, 700,000 jobs a week. Remember, that was the goal of the easy money, get everybody from the pandemic back to work. We're less than half those numbers. But the stickiness is they're staying too high. This is the problem with inflation too. I today went to Whole Foods and I wanted to pick up a few navel oranges. In my wildest dream, I didn't expect what would happen. On sale, each orange is $1.61 at my store here. $1.61 for an orange. I was flabbergasted. By the way, these weren't the big ones. The big ones were $1.99. $2 for an orange? I know you're going to say, well, Ira, you're buying at the wrong place, whatever. Well, I'm hearing that the crop, even in, Florida crops I know have been hurt, decimated is the right word. Now Brazil's catching this disease. You may be at the day where you're $3 an orange. Be careful. It's just strange. And I mean, who doesn't like to have an orange? All right. I want to remind you before I go into the rest of the dissertation that we're coming to the end of our Cyber Week sale. So if you're serious about wanting to get my research and getting for that something for free, my charting course, one of these that you pick, this is the time. I intend on finishing my outside day course this weekend. So I've already gotten my time set up, and I'm going to be doing my darn best to get it all finished, give it to my people, they'll put it together, and we'll have it ready to go. All the prices of my courses are going up by about a third Monday. So if you want to buy a course at the old price and you don't want my 1-year subscription, fine. Do it now because you'll save. But the idea that I'm raising them by that, I figured out the cost of what it costs me to give you charting software with each of the course. I give you free access to my market research, the full research, along with my SPDR ETF for a limited time with each one. I broke down what the costs are, and then I adjusted the course price so that basically, if you buy a 1-year subscription to my research, you're getting this for free. No magic, it just makes perfect sense to me. And that's what counts, is what I think. And that's what I ended up doing. So when I put it together for you, that's it. As I said, this is all going to end very quickly now. You won't get another break like this year, and I don't know when the next one will come. And it's a great shot for you. I love the outside day course. It's one of the best I've done. I already know I'm probably going to add to the Bollinger Band course, and the people that already bought a course will probably get the chapter or so that I end. I like to do that. But when I redo the course, then it's a whole new course, and you take it from there. To get these, just take your cursor, move it to the top. You'll see an icon, and away you go. So be it for that. So now we come back to what the markets are. We have one more shoe that's going to drop, and that's going to be the week of the 13th. So you have an open window. You're going to get PMI numbers and other numbers right now. Okay. And then you're going to get the OPEC deal this weekend, because what has happened now is the European Commission has gotten all 27 members of the European Union to agree on a $60 price cap on crude oil with a 5% buffer. And I'll explain it in my full research report. And now they want to get the next number done for gas. Natural gas done by the 13th, and they're working on that. But this will get the ire up completely of Russia. Once the G7 signs off, and it's a rubber stamp for the G7, they'll sign off on this deal. Then what does Russia do? And now OPEC's got to figure out, what does it do with this new problem? Does that put more, less oil? Where they're going to be? We know Russia is flooding the market with all the oil that it can right now. Why? Because a lot of the insurance on the ships comes out of the European Union, and they're going to shut that off completely. A lot of the ships come out of there. Anybody to do with it has to pay attention to this, or the fines are very serious. So Greece doesn't like it. Other countries that have the big fleets, big problems for them. Okay, Russia can call on India, can call on China and say, hey, bring your own takers here, as long as they're not using European Union insurance and the brokers and so on and so forth. They can do it that way. It'll hurt the production. Doesn't mean Russia will be hurt, because if oil prices go up with less production, they still benefit, and they have buyers. I was reading, they were shipping, let's assume, 80 million barrels a day, and the buyers have been taking up 76 without the European Union. Pretty good. So BTU, you're back up into a key resistance point. You do see that, I hope. Pay attention to that. The trend has been up very nicely. The market is over the 18-week average of closes, as you could see. So where's the resistance? You've been riding it. You keep hitting the Bollinger Band, getting thrown back. Learn how to work with this. Are you embedded? No. So you're getting to a point where there's some danger in the market. That's all I'm saying. Am I top picking? Absolutely not. Won't do that. Would I have you commit new money to the market? No. Anytime you get the readings in these slow stochastics up and over a 70 level, I have certain rules that kick in, and if you take the course, you learn what they are. When you look at the bank index, you're sort of stuck here at the 18-week average, and you have been, what if I tell you, since August? If the daily charts do one thing. If you look at this chart, have you gone anywhere? This is not the place to have money deployed. That's what it is saying. Walk away from that. XLI, well, I'm getting nervous that you're up like this. You're fighting a battle at the 100-day average, and you have for the past 1, 2, you stayed over it these 2 weeks. So 2 weeks, you've given ground. Could you get to the upper Bollinger Band? Yeah. Do I think you'll go anywhere after that? No. But the industrial sector is looking better and better for the time being. What it's got coming at it, unfortunately, is a lot more interest rate hikes. And what do I mean by that? The Fed can't stop with these employment numbers staying as they are. It has to keep going until the numbers come down to a number they're satisfied with, because the more money people have in their pocket, and they got to realize this, that you're adding these people to it, well, that's inflationary. They're going to spend money and support whatever's out there. So the demand factor on the goods is very important. And I'm watching that, and I'm watching it carefully. And I mean, to me, it's just so simplistic. If people work, they can afford to buy things. Could you get to 105.90? Absolutely. What would I be concerned about? You have an outside week up. You took out last week's low and high. If this week or next week you take that out, it's probably a sign a correction's going to begin. Until then, it could still move higher. In the energy sector, well, you're not going to get me involved until I know in this what happens this weekend. I'll wait. Not even worth a review. So then we look at Freeport. I'm a guy that still thinks that before long, you're going to be up at these numbers. Why? Let's understand, you can get corrections along the way. I'm expecting them. I'm expecting we'll get good-sized breaks in this soon. But eventually what happens is the game plan works. Now, whether the U.S. settles and the Fed has to settle that instead of inflation going to 2%, it's going to go to 4% and stick there, I can't tell you yet. But my guess is between 4% and 3%, it's going to get real sticky. They can't, with these high rates, stop employers from keeping ads going, hiring, and the unemployment is still at 3.7%. It hasn't budged. They're trying to get it up at least to 4.25%. That's typically what happens to get you into a recession. You need a 0.5 percentage point hike. We don't have that at this point in time. So they got to keep going. So it's 50 points in December. I would never stick my neck out to say I know that in February it's another 50, but it's another rate hike. It's another rate hike after that. It's another rate hike after that. You'd have to have these numbers collapse on you. So they can say, well, we want to give the market time with the lag effect and things are slowly falling. Okay, but they'll keep the pressure on. And then you get another effect. He said, he being the Fed chair, he's going to hold the rates higher and longer. He wants to make an error on keeping the genie in the bottle, if you can get it, whatever number that bottle means. If it's Chanel number 5, 5% inflation, that won't do it. So it's got to be Chanel number 2 or 3. Got it? That's what I'm saying. Gold. There's a number here now where I want to take money off the table. I was with a good friend today, one of the biggest watch people in Chicago, used watches. I mean, this man, phenomenal. I've known him decades. And you go in, and it's a mecca of watches. Name a watch you want. This guy can not only get it, he probably has it in stock right there. And we're talking all the top end ones. And so I went in there and, Ira, what do I do with all the gold? That's the first thing. So I was telling him, I said, hey, I think that the market's ready to stall right here, but I think you're fine owning gold because so far the pattern has been a weak dollar supports gold. Inflation doesn't do it. It seems to be that it's the weak dollar combination with sticky inflation. Therefore, expect corrections, maybe the 1800 levels. This is what we're talking about. And I said, but I do think that ultimately going higher, maybe a $2,000 level now, is more realistic in time, not today. What about the gold miners? Well, sometimes the miners are a better play, but they're loaded with resistance between the Bollinger Band, the 200 and the 100-day average. They can get there, but you already used a lot of momentum up. I don't like buying when I see momentum like that. It either embeds and locks it in. Then I get wildly bullish, the way I got wildly bearish down here when you get the embedded reading. But you don't have that. And here, you lost that embedded reading as fast as you got it, and you saw what happened. So you got to learn how to play with those. In ARK, okay, this is Cathie Wood's time for this to come alive. It either comes alive or it doesn't. It hasn't gone anywhere. It's staying near the year's low. So yeah, it's up for the week 6%. And I guess when you've taken something down as dramatic as this is, a 6% gain is nice. But does that look bullish to you yet? Not to me. Apple. So today I was telling clients it's worth a short probe, short side. Why? Well, you've got all this resistance right here. You've got to get back over. And I'd be wrong if you can hit 153.60. Absolutely. But if it lets loose and gets under this week's low now, watch out. Then I think you're going right back and maybe a new low down there. I think you're at a crucial time in Apple. Tesla. I'm dying to own Tesla again. I'm looking for where. I don't see it. You're getting an embedded reading. Both numbers were under 20 this week. Last week, both under 20. The week before, both under 20. So the time to get long is not now. Right now, until the red line closes over 21 on rallies, it's still a short sale. Yeah, it's still a short sale. By the way, that truck got out there. Nobody knows the price. Nobody's seen it. I was listening, dying for the reviews. It's got a 300 and a 500 mile range. Came out with it 5 years ago. Where's the pricing? I know nothing about it. But that's Elon Musk. He's clever. And what did he do with Kanye? or yay as they call it. Good move on your part. Not Kanye's, on Musk's part with Twitter. Get rid of him. Don't let him on a social media again. As you can see, where the market's at, you lost the embedded reading in Meta. So there's a story here in Meta. The story is the market's overdone it on the downside, might be headed back now to the 18-day average of closes. TLT, don't expect this to keep falling. Expect it to fight a battle now right here for a little bit, but it is in the bull camp. Where would you put a stop? All the way back under there? I don't think it's worthy of a buy. Sorry about that, I went too far. But this is what I'm saying. And what's the theme? We've used a lot of the energy to get up here, and is this the spot I'd want you to get long? No. Do I think that the Santa Claus rally's still very real? Very real. But December 2nd isn't when it begins. Read the Stock Traders Almanac or Google it to learn when it's at. I certainly want to be playing it. All right, Cyber Week. Remember, move your cursor to the top here, give it a click, take advantage, get one of the courses. And what will happen on the outside day courses, we'll let you know when it's ready for you to get, if that's the course you want to take. Everybody will be able to get it. It's probably in another week, no more than that. I'm Ira Epstein. You have yourself a great weekend. I'll see you all Monday. Enjoy it. Take care.